Hello guys, it's ETM Effects. I'm going to go over the power of three, the intraday market maker cycle. So the power of three consists of three phases: the accumulation, the manipulation, the distribution cycles, which later on can lead to either a reversal or a continuation. And we can see the examples here. We'll phrase this as a daily time frame candle. As you can see here, you had a wick, a higher wick on a bullish day. What did that indicate? The price reversed right here. It had the high of the day to later on close below. It could have closed right here. It could have closed right here. It could have even closed as a red candle. It doesn't really matter what it closed. The most importantly is it had a reversal. Here, it did not have a wick. Price opened right here, manipulated, which would be this area, and closed solid, or even maybe with a small wick. It did not reverse. So price continued. So this would be the continuation. Let's expand on this. So in a reversal case, we can say price accumulates, fakes out, does the manipulation, traps anybody that tried to sell under the consolidation, to later go in an expansion phase, to then reverse and close right here. So what do we know? Price open was right here, price close was right here. So this would be our reversal. In the continuation, price would accumulate, manipulate, expand, fake reversal, which would be a base, a consolidation, to later on expand. So the price would open right here. This would be our wick, and the price would close right here, a closed candle, or maybe even a slight retrace for a small wick, but there would be no reversal. So this is the difference. So let's go into in chart example and expand on this. So here we have an accumulation. Price accumulated when the daily candle opened. Went for manipulation. Took out the consolidation right here. Trapped all the sellers to later on expand. And then form a reversal here, which we'll get into in a second, to later close below. Let's go into the continuation example. So here we have our continuation cycle. So price accumulated, took out the accumulation, forced the wick, and expanded, and never reversed. So the day started off right here with the daily open and closed above with no reversal. Is doing a reversal. The reversals are usually between 8 o'clock, which would be the New York open, and the end of the day candle close, which would be 4 p.m. So we're going to target somewhere between 10 a.m. and 12 p.m. noon, right? So this reversal right here happened at 10:30. What happened here? Price formed a M. That's the simple letter M. But the second leg is longer than the first leg. Why? Because price formed a peak right here. One more fake out before the reversal. Price needs to trap the buyers one more time before coming down and trapping all the buyers to later break structure right here and use any inefficiency, which here it would be a breaker. It would use this breaker as reaction to drive price down, or it could even break structure, come back right here, use the RTO to reverse. So the reversal is an M, or if it's a bearish reversal going bullish, it would be a W, with what? The second leg longer than the first leg, initiating the trap. Go over this one more time for a quick overview. So here we have our accumulation. Price accumulated, went down, trapped the sellers inside of the manipulation trap, which is, again, if this whole thing was our daily candle, this would be the wick point. Inside of our wick point, which is a manipulation, price trapped them one more time inside of a trap. We'll call this a turtle soup / purge. So, and how they do that? By taking the sellers out one more time right here. Trapping the sellers inside of the initial manipulation. And that's how you look for an entry. And I covered this on my website, and I'll cover this on YouTube in the future. So price comes up, break structure. What happens when price breaks the accumulation phase with strength? It shows us SOS, sign of strength, which indicates the price wants to continue higher. Price uses the rejection from the accumulation base to push price up, form a leg, come up, trap the buyers one more time before breaking structure right here, coming back into the range, using an inefficiency to finish the day off in a reversal. So in a daily candle, this would be a wick, body, wick. This is the wick of the manipulation, and this is the wick of the reversal. And this is the body where price open and price close. Price open, price close.